Hi, I'm Jacques Fischer, CEO and founder of the IGrow Group of companies. And a question I normally get from our investors attending our live events and seminars is, Jacques, how do I buy the right type of property and beat the market? Have you ever wondered how some investors are making enormous amounts of money in real estate and just seemingly always get it right to buy the right type of properties in the right location at the right time? They just get it right almost always. There are tens of thousands of properties for sale. Less than 2% are real investment grade stock. So how do you draw the line between a high performing investment property and just an average property? Well, there is a bit of a secret recipe that I want to share with you. You need to follow if you truly want to achieve the same results as the most successful real estate investors out there. Now, successful investors know how to select the right type of properties in the right areas and buy them at the right time. So, how do successful investors grow their property portfolios 2 to 5 times faster than what the average investors can? Well, I'm going to give you my 7-step approach to almost always beating the market average, the average investment property, and have your money work for you at its highest potential rate of return. I call it my top-down selection property investment approach. Number 1, know thy strategy and thy buying criteria. Now, there are hundreds of strategies that you can possibly follow. You simply need to pick one strategy and master it. Are you focused on building an asset base, equity, or is it going to be cash flow that you're after? What is it specifically for you? Predetermine your buying criteria, critical, before you search for that perfect investment property. Commit to your buying criteria. Your 1, 2, 3 bedroom units or house, is it going to be a sectional title or maybe an owned title property? Now, don't be totally rigid in your approach, but know what your parameters are regarding your price, the shortfall, the cash flow, and the return on investment that you ultimately want to achieve. Now, step 2, getting your timing right in the economic cycle. Look at the bigger picture of the economy as a whole and how it's performing overall. You need to buy at the right stage of the economic cycle. This is crucial. Ask yourself, at what stage of the economic cycle are we at? Are we in a boom? Is it a downturn? Is it a bust? Are we in an upturn phase? Remember, you never want to buy too close at the top. The most successful investors are counter-cyclical investors, buying when everyone is selling and selling when everyone else is buying. Except if you follow the IGrow philosophy of investing in real estate. Then you don't want to sell your properties, but rather keep onto your properties, build an asset base, and over the long term strategically unlock the value of the equity and roll it over into more and more assets that you'll purchase. Number 3, selecting the right province. Buying in the right province is all about assessing the right stage of its own property cycle. Every province has its own economic cycle. No province is equal, believe it or not, and each will be in its own unique stage of its own economic cycle. I don't want to buy at the peak and wait for growth or even see a decline in value. So choose the right province within the right stage of the economic cycle. And I hope that this makes sense to you. Number 4, selecting the right suburb. I look for the right suburb within the right province. I invest where there is multiple economic pillars driving the population growth and driving the economy of the specific suburb that's pushing up the property values. So I look for strong demographics in a specific suburb because the demographics is a very strong driver for sustainable rental income and sustainable capital growth. I also look for a proven track record of sustainable capital growth in the suburb I choose because a strong proven history of rental income and capital growth is always telling me that there's going to be more sustainable growth heading within the near or coming in the near future. Number 5, selecting the right area. You need to look for the right area within the selected right suburb. The truth about the trenches is that you need to get in there. What I mean by this is that if you're a real estate investor and you want to really be successful, you need to walk the streets. Like our National Director of New Developments, Gerard Jooste, always says, Jacques, you need to feel the spirit of the land. You've got to get your boots on the ground. Always look for where the most desirable streets are located so that you can cherry pick the best buy-to-let opportunities in the best street, in the best potential area. Views of the water, views of the mountain, or some other great features are always more popular and also in much higher demand. Where there is a demand, there is growth, and we all know that where there's growth, there's money to be made for us as buy-to-let real estate investors. Number 6, choosing the right type of investment property. Then, within the right area, you need to find the right type of property. Find out which type of property is performing the best in the area that you are choosing to invest in. Is it a sectional title, a full title, a 1-bedroom, a 2-bedroom, or a 3-bedroom unit that's performing the best? Again, the past is a good predictor of future property performance, and never forget to ensure that you adhere to your own strategy and your own buying criteria, like I've already mentioned. Number 7, analyze the numbers. So many investors do all the best research and follow the perfect selection formula, but fail over the last hurdle when they fall in love with the deal instead of falling in love with the return on investment and the money that the property can potentially make for you. By simply running the numbers through a customized real estate investment program, a software tool, you'll cut through the emotion and you'll be able to make an informed financial decision right there on the spot. This is in summary my 7-step top-down strategic approach for finding the best investment properties that will almost always beat the market averages. So by choosing the right area, the right type of property at the right time of the cycle is going to be your key to outperforming the average type of property by far over the long term. Remember that in real estate investment, the best predictor again of future growth is looking at past performance. So strong growth will continue because of the scarcity of well-located properties in our country and the strong demand for properties built for certain types of households by our changing demographics and our increasing population. Tenants and first-time buyers are always moving to secure and safe, well-located, medium-density residential developments. So, go out there and use my 7-step approach to selecting the right type of property. Number 1, just to repeat, is know your strategy and buying criteria. Time the economy and the cycle. Select the right province. Select the right suburb within the province. Select the right area within the right suburb. And choose the right type of property in the right area and choose the right street location for that specific property. And then you've got to run your numbers to make sure that your money is working very hard for you. So you can do this. Go out there, invest strategically, invest intelligently, become financially free, and leave a legacy.